I just pushed the start recording, and another minute. Anybody got any questions so far about anything before I start blabbing here? Guess not. As I said, I've already done the Survey Monkey thing, so 4 times, and I think a lot of people do like the 7 p.m. time, which is good. All right, so it's 7 o'clock. I'm going to start her up. Okay, so for those that don't know, my name is Brian. I run quantlabs.net. I'm under the guise here of implementing a new trading platform. I don't want to call it a platform, really. It's just a whole bunch of processes that I have in the works that I can bring together and tie together. So I'm going to talk about them at a very high level. And what I'm going to talk about is the benefits. Obviously, what has been chosen in terms of technology is pretty easy to use. Now, this system is really targeted towards those that are running probably trading platforms for enterprise use. And the key is when it comes to enterprise use for these type of platforms to be implemented into an enterprise, they have to have a lot of recognizable technology. So it's harder to implement something like an R into a bank as opposed to .NET. So obviously I have to choose those type of technologies very carefully, and these are the reasons why I'm going with these technologies. Now, we could talk. First, let me talk about R, Python as an open source. You know, being free and all that, and are they easy to adopt? I was just on Skype a little while back. We were talking about Python. He said it's not as easy as it looks. It's not as slick as something like Matlab. Both R and Python have their challenges. Yeah, they're free, but obviously some people say that free comes at a price. I call it time. So I like my Matlab, and I know some people out there, and I know who they are, don't like Matlab, and that's cool. But I find it, I like it because it gets me up and running fairly quickly. It's a fairly slick tool, and the community is awesome, and the training material that MathWorks provides quite good. So obviously brings me to the pros of Matlab. Now, I've already mentioned this, that the ease of use, there's a lot of professional training resources, and most of all, as I said earlier as well, it's widely used throughout enterprise environments like banks and hedge funds. Now, not only that, but with the clear advantage that you have with Matlab is you can generate your scripts in the Matlab environment, and then you can co-generate into something like C or C++ for algo deployment into a trading platform. The other big advantage with the Simulink is Simulink. You can visually design your models and at the same time generate fairly efficient embedded C++. Now, this is really good for those shops that may one day want to choose an ultra low frequency deployment option using something like an FPGA, and you can kind of have a easier workflow to develop and implement an FPGA solution through the HDL coder. That's part of the MATLAB environment. So in essence, these are the top probably 3-4 reasons why I like my MATLAB. And you know, everybody has their own way of doing things, but I just keep coming back to MATLAB all the time, even though when I did my little 6-month exploration of R. And then that brings me to the actual platform itself. Obviously using .NET technologies. One thing about Leonard Cohen has taught me is that C# is a very powerful language. Not only is it easy to use, but it's very powerful in terms of on the technique or the technical or geeky level. Just let it be at that. On a low level, it's very powerful. In some instances, it can be more powerful than C++. Another good .NET technology is Microsoft's database, SQL Server. I played with it for a couple of weeks, where you can, you know, basically keep track of things like if you want to archive market data and have it directly connect into a data feed. And then you can use the technology which is built on SQL Server 2012 called Stream Insights that can be used for complex event processing, or maybe you want to do some data mining exploration. And oddly, you can generate some really cool strategies that come out of that. Now, another thing with Microsoft technology is the Excel front end, which is really powerful. I've got one library that I'm going to actually implement that enables you to do really decent charting, screeners, and portfolio management with this one tool. And in terms of an OS, in terms of to deploy on, some people really don't know anything about Windows Server in 2012. It's a stunning operating system, and it's putting Windows technology light years ahead of something like Linux in terms of just ease of use and just productivity and some other things as well. Now, for those that don't know, I'm right now using IQFeed as my data provider. It's really affordable. I always like to call myself the schmuck, or in other ways of saying you're a little guy or a little gal. So if you're starting out, IQFeed is very powerful, very affordable. And you can get real-time data and historical data for all assets out there. It has the highest precision. Now there's some third-party tools that I use that can be used for rapid downloading, and then that can generate some very powerful data files for backtesting. And of course they have a very powerful API for connecting a platform that I have into their environment through their API. And that brings me to the next company is Interactive Brokers. Now, I'm planning to use these guys as a for execution, but lo and behold, I found out about something called day pattern limit trading. It's just something we're still confused about, trying to confirm it from Interactive Brokers. But essentially, what I just found out today is that if you're not having at least $25,000, you'll be limited to 3 trades per week, and we're trying to get clarification on that. So once you, let's say, hit 25K, I think still IB is a really good broker to go with. Now, I'm very limited being myself in Canada for automated trading through it like an API. This is why I use IB. Now, also, I'm going to be connecting through one of their desktop tools called TWS, Trader Workstation. And it's kind of easy to work with. I just connect into it. You can have up to 8 clients connect into the desktop, TWS. And I think it can be useful for very low volume in terms of orders. Once you go into more higher frequency, I think you do definitely need to start using the IB gateway or Fix itself as you scale up your volumes of trades. So that's Interactive Brokers, IQFeed, the .NET technologies, and obviously Matlab. So that's my development stack and my data providers, and in essence, these are my resources. I do run this business called Quant Labs. I have 2 resources, the Quant Labs .NET Academy, where I have courses for sale that you can actually learn about open source trading or MATLAB or R algorithms and so on and so forth. So you can check that out. Like I said, I do have a membership where people are paying a monthly fee to learn more about my platform and that sort of thing. And of course, I have my daily blog as well, where I post a lot of stuff. And I also do have a forum as well, which can be found under the Academy here. So that's about it for my spiel. That's not even 10 minutes. But again, the focus is Q&A. So let's get all those questions queued up. I'm going to see if our London Quant wants to be part of this, or if he can ask or provide any answers there. If you can let me know if you can provide your voice, Mr. London Quant. I already got a couple of questions already, so we'll go through them in a bit. It takes a little time because what I find is that the screen here just moves really fast. We get a bunch of questions. Okay, so I am looking for the first question here. Just give me a second here. Okay, let me just see if Mr. London Quant is available via voice. Hang on. There seems to be a lot of questions here. I'm just trying to see if he's available. Okay, yeah, Mr. London Quant's here, so at least can type out. Okay, so we've got some kudos here. General rule of thumb, that's from Joseph for most brokers. Okay, I'm assuming you're referring to the daily pattern. Is there a promo code for the membership? Right now, for you, Mike, we do have a promo code. It's the current price. I actually will be closing down the membership and removing public access from it because of we don't want too many people in the membership. And I'll be starting up some other memberships on that. So that's the cheapest you'll get for now, and I'll be keeping that available for the next probably 6 weeks at least. But you want to get in on it now before as we start to get that workshop underway starting, I think, next week. Okay, so Joseph asked, what products am I going to trade? I'm right now looking at Forex and then moving into something like futures and commodities. I've just come off a reading binge with Futures Mag, which I really like. So that's kind of like what I'm after. Okay, so we got a question from Mike here. Sounds like you have not started trading, though, the stock you described. You're trying to sell this stock to us. Actually, there's no stock I'm wanting to sell. In the membership, I haven't mentioned it really. Part of the membership, you get source code to it, and I provide a lot of walkthroughs of the system itself. So there's really nothing to sell except the membership itself, just to get access to it. But there is, as I said, there is code available. Have you started trading with the stock? No, we just started prototyping with it. But there's a lot of flexibility that comes with it because you can develop your own strategies with it with no limitation because, as I said, you do get source code with it. So it's no longer a black box. Hopefully that answers your question, Mr. Mike. That's Mike Seeger, not Mike. I got Mike DT here as well. Let me see. I'm going to see if London Quant is available to speak. I don't know. Anybody else got any questions here? I've got, oh, have you started trading with, oh, to answer your question, have I started trading with it? No, we're only paper trading right now. I'm actually researching on which broker, as I said, with the interactive brokers, that's who I'm going with right now. Just due to the fact, as I said earlier in the presentation, that that's the only automated trading broker I have. But if this PDT, the what's called daily pattern trading limit comes with limitation, I have to find alternatives, and I'm hoping to find somebody really good. What experience have you had real money actual trading? Really, I've been studying for the last 3 years on it. This is why I keep everything very low priced. I keep it very purposely low priced just due to the lack of experience. I just blog the journey of what I'm doing. I'm just a schmuck trying to piece together an automated trading system. But it's grown into bringing in quite a lot of people, being connected to people like the London Quant as well as Ernie Chan as well. So I'm kind of lucky to be connected to guys like that. Okay, we got a question from Name. I hope I got your name right. I'm sorry, man. How would you go about coding your system if you wanted to analyze both historical and real-time data using IQFeed? Would SQL Server be a good idea in the solution? Okay, to answer your question, IQFeed has an API. So you directly connect into the API, or use the API to connect into the feed. With the feed of data, let's say you're tracking, I don't know, tick data. You can use that tick data in real time, have it process against your algorithm, and then the algorithm would then, let's say, have a response and then execute trades based upon those responses. Now, in terms of SQL Server, you could use it with for archiving data. And then, as I said, you can just use it to archive data, and you can do, I don't know, data mining, whatever you want. No different than if you're going to use it for KDB or something like that. Nam has a comment here. IB Canada is moving to its back office to Canada, so PDT will no longer apply. Oh, that's good to know. Thank you, Nam. I really appreciate that. I want to hear that. Right, I'm not bottlenecked at 25 grand that most people like myself don't have. Eric's asking, does paper trading through TWS simulation has order matching built in? Well, I can't really answer that, Eric. I'd like to say yes to it, but it's a simulated environment. So all I can tell you is it enables you to simulate fills, but there's really no price matching in it because, as I said, it's simulated. Yeah, I wish I could give you a better answer, but I would imagine if you do fund the account, you may get better price matching, but all I care about is just seeing the execution live as I trade. Now, Barry's got some questions here. Do you run MATLAB, TWS, Excel, third-party, all under Microsoft Server? Do you virtualize Windows 7/8 for the different parts? Okay, that is a good question. As I said, I try to keep my components really lightweight. Just due to the fact, obviously, you don't want to take up a lot of CPU utilization. So based upon whatever component might go out of whack, obviously separate them into its own separate physical box. So if you're asking about virtualizing Windows, I'm not a fan. I mean, I like virtualizing, but it's a possibility. I haven't really played with it enough to give a better answer, but right now I'm trying to keep everything small and local on the same system. But I wouldn't be surprised if I'll either be virtualizing or keeping it in separate boxes. But most likely I'll try to keep them on physical boxes instead of virtualizing them. Pavel's got a question about, hi Brian, what type of strategies do you consider? You said Forex indicator based and how the components you mentioned are better than MetaTrader. Okay, with Forex, obviously that's something I'm going to be focusing on, and then futures. In terms of MetaTrader, I just find that MetaTrader is really limited in terms of how many strategies it can have running at once. What happens if I want to have two brokers so I can route a certain volume of transactions onto another broker? A lot of platforms don't enable you to do that. MetaTrader is a good example because MetaTrader is tied one-to-one with a broker. But with an open source trading platform on my platform, you have multiple brokers, so that's a big advantage. Now, London Quant has come back with a response, right on. Responding about order matching, but no slippage in price impact. That is something I forgot to mention. Thanks, man. Mike asks, have you talked about any prop shops or any offshore brokerages that use programs like Sterling and Laser? Okay, Mike, I know, being here in Canada, there's a shop in Montreal that offers Sterling. When I inquired with them, and there's actually another one, not sure if it's WTS, maybe, but there's another one in Toronto, but you have to have a minimum capital of $1 million to get into their network. So that's something me, the little guy, can't really afford. And even if I went with them, what's the advantage with going with Sterling through a third party? Kind of doesn't make sense, I guess. It's more for people, I guess, that don't have an idea. Oh, better commission. Possibly, yeah. Does that answer your question, Mike? Let me know. Much better than IB. I agree. But you got to remember, Mike, we're just starting out. You know, obviously, once you hit a certain set of capital, you want to go with a better broker, a prime broker, maybe obviously through a bank or I don't know, even through something like an LMAX out of London, who I kind of like, or even Duca's copy that has a better reputation. But to get into something like that, you're looking at a capital requirement, which is pretty inaccessible for little guys, unless we do so well. Anybody else got any questions? I think I'm sitting here twiddling my thumbs. Oh, Mike asks, are you trying to break into quant shops at TD? No, I have nothing to do with banks at RBC or TD. RBC, Royal Bank of Canada, or Toronto Dominion banks. We have no interest in. We're just being independent guys. You know, why use IQFeed if you're also using IB? Okay, that's a good question, Brian. The reason is because I want to have access to real world data, which obviously IB. You know, the current environment I have for IB is I haven't funded anything with IB. So IB, I'm not a client. So all the tools that I have, they enable you to be connected into interactive brokers through TWS, and you can do it. Anybody can do it. It's all free and doesn't have any requirements for it. That's what I like about it. But again, I use IQFeed for the real-world market data, and then just use IB for execution. That's all I'm testing right now. I got another question from Joseph. What would you say is the minimum connection speeds in terms of MBS to implement your strategy? I think any high-speed connection should work. I'm here in Toronto. I got, I think, 25 megabits per second. So it's not too bad. That should be sufficient. It's getting faster as time permits. My provider here at Bell Canada is supposed to provide like 150, some crazy number. I know in London they're up to 150 bits per second in London through Virgin. It's getting faster and faster as time passes. Mike asks, am I paying $300 for the API developer feed? No, I'm not, because I'm helping market the IQFeed. But I do have discounts through IQFeed. Gives you something like 15%, and they waive the fee, or they drastically reduce the API fee. I could probably set up get an arrangement for you if there's enough people that want to try out the IQFeed. They're really cool guys. But I do know that there's already a 15% discount. If you just go on Google and look up Google IQFeed Quant Labs, there's a discount of, I can't remember the benefits, but that's been up for a while. So that should answer Mike's question. Pavel asks, actually I might skip the question. IB has data too. Yes, Brian, you're correct. But as I said, I haven't funded an account, so I'm not really using real market data from IB because I'm not a client of theirs. But to simulate and build strategies from it, it should be okay. I'm not saying it's the best way. But at the end of the day, your data provider and your broker should be the same, as Lennon Quant has stressed to me on that, because I was point blank asking him on that. Okay, Pavel's asking, technologies are mainly back-end. Do you plan to use external charting, reporting, monitoring, and software components? Well, Pavel, I'm glad you asked. Well, there's two answers I can give you. There's an Excel product that I'm using or will be using that offers charting and reporting and monitoring all in one package. And that can connect into Interactive Brokers, IQFeed with the same piece of software. And yeah, that's that. You can also use, obviously, Matlab for that as well. Mike asked about fee. I'm not sure what he's asking on that, because I've already mentioned about the fees for the membership, which is pretty cheap, I think. Sorry, dude, I keep getting your name mispronounced here. Okay. What's the current charging structure for algo trading platforms if you're managing money for accredited investors? That's an open-ended question. If you can set up an IQFeed account, have 4 clients. You can start as low as $10,000. You can go as high as into the millions. It depends upon what you're trying to do. Yeah. I don't know if that can help you out. Joseph asked, discount tip is great, thanks. Yeah, I'll mention it to them, see what they can do for you, and keep your eyes out for that. Jonathan asked, I'm a TradeStation guy. Did you find any significant drawbacks in relations to IB API? So I mentioned earlier, yeah, you got a situation there because you're dealing with TradeStation, and TradeStation is now your broker as well. And those kind of brokers I'd be careful of because they can manipulate all kinds of things on your orders. So that's why I like the freedom. I mean, Interactive Broker is not the best either, but if you're starting out, you have no choice. But if you can find a LMAX, which is market neutral, and trade with them, that's your best bet. And it's LMAX. They're an alternative exchange, but I treat them like a broker. And they're only Forex only, okay? And I think they're CEF as well. Okay, thanks. You got it, mate. Do you have a list of which brokers allow little guys to use software for HFT? HFT is a tough one. Depends upon your frequency of trades per day. I think you're going to hit it if you're. Depends on your capital, because if you're let's say $1 million plus, I'd be going through a prime broker, not a broker, smaller retail broker. You'll get killed on the transaction fees as well as the, as I said, the manipulation. But I would go, if you're going to do that, I would probably, your best bet, as I said, is LMAX, LMAX, LMAX. As I said, they're market neutral. That's who I go with. Hope that answers you, Mike. Eric's got a question. Have you been able to archive down to the movement bit size and ask size with a tick in the SQL database setup? Yes, I have. I actually have on my membership a schema that has ticks, and I have a source code that will directly feed my ticks into the database, and it's at tick level. And I do have that source code and SQL schema available online. Oh, Len Quant says you can speak. Okay, hang on for 1 second. You're muted. Hello, Mr. Len Quant. You're out there. You can now speak. 1 2 1 2. Test test.
Can you hear me?
Yeah. You can speak whenever you like, Mr. Quant.
Okay, mate.
You're unmuted.
Oh, cool. Can you hear me, mate?
Okay, so we got Len Quant. He's unmuted. Hopefully you are able to speak.
How about now?
Hang on here.
Cool.
Can anyone speak? I forgot to turn on my speakers.
No, dude. So
hey, there he is. Sorry about that.
No worries, dude.
The funny thing is that I was just 5 minutes in. I forgot to test the mic, and now I just forgot the speakers. Shows you what kind of professional I am. Okay, so we got Mr. Quant available via voice. This is a rare moment again. Here
with regards to the big data thing that you're saying.
Okay, go ahead.
I mean, what was the question? Because I hear about like dealing with big data with an SQL database.
Yeah.
For what? For real time?
Not real time, just for analytical, sure, just back testing that's what I would use it for, nothing else.
Another thing, I mean, it's easier to go with flat files, just because of the pure size.
Yeah, I agree. I think the advantage...
Or just serialize and compress them and just put them as blobs on a SQL. It's easier, and just keep like a hash of indexes of the data.
Yeah.
That's all.
Yeah, you've mentioned the MongoDB or any NoSQL solution. You want to talk about that at all?
No, I mean, like if you just want to just store them in a nice way, just go for the file FS of MongoDB, but otherwise just go row by row of ticks. It's insane. There's no reason to do this kind of thing.
Right. Okay, Mike's got a question. I'm just starting. Can I get a good base of knowledge with the membership? For you, Mike, yes. I like .NET. I've looked at Linux. I've looked at C++. I find C# the easiest language to start from. But as I presented last week, everything depends upon you and your capabilities of wanting to learn tools like MATLAB, R, Python, C#. It's all really up to you and your limitations and what you want to bring to the table. I mean, I provide the map, but am I providing what would you call I can't, my mind is always slipping on me. If you're looking for like a quick push button type of technology box and then you build from that, that's a tough one because I don't want to disappoint people, and if people are coming in with that expectation, that's kind of tough, because you'll see if I'll be putting up an itinerary of the workshop. It's huge. It took me 5 minutes on this video I put up today just to explain all the different things at a very high level. There's just a lot to it. Yeah, so it's yes and no. It just depends upon you and your capabilities. You have anything to say? Oh, Mike's got another. Okay, I see okay on C#, MATLAB. No, I want to start from ground up with the program. Okay, if you're doing that, then yeah, for sure. Because I just don't teach C#. I don't teach MATLAB. I'm assuming that there's a certain level that you may have, and if not, I can provide the resources to get you started. But you just got to remember, everything's on demand, so you can always go back to refer to stuff. That's the advantage of this sort of stuff, especially with the YouTube videos and everything else. So, do you have anything to say, Mr. London Quant? I guess not.
What?
Well, I mean, so it sounds like he's a web developer. I mean, why don't you explain your background in terms of where you came from in terms of your programming? I mean, I keep saying you're like a machine and you just keep going and cranking out stuff I never would think of. But, I mean, how did you start in the world of programming? And why don't you explain what you think the big advantages are with something like a .NET and a C#?
Well, look, in my case, I'm coming from quite low level assembly, pretty much, and microcontrollers. So dealing with, .NET or C++ is not a biggie. But, if you want to get something up and running quite quickly, Java or .NET is the ideal solution. And once you have it up and running, then you just convert the whole thing to C++.
Yeah.
I mean, that's for me is the most viable solution.
Well,
to go from scratch in C++, if you're solo, forget it. Very few people can do it.
Well, this is what I'm trying to tell people. Like when they hear me say C#, and I'm building this thing in C#, they're like flabbergasted by it because they don't think C# is a powerful or innovative language. I mean, some of the stuff that you're doing.
But at the same time, there are also so many people that they think that because they're using C++, they are good developers, and they are not. Very few developers. C++ developers are good ones. Most people know very bad mistakes, and they repeat them again and again. And you see the source code, and you want to kill yourself. So, it just depends how well you know the language. You know it well enough, you're fine. Yeah.
Well, what would you say to people that are going through some kind of certification or some kind of college course now? They're C++. I mean, to be a well-versed C++, you're looking at
any open source project and start reading the code. If you can do this kind of thing, you're fine. If not, you have a problem. Just knowing the rules means nothing.
Yeah.
I mean, or knowing the rules and knowing few design partners, okay, good for you. They will be useful, but means nothing again.
Yeah.
You have to be able to read other people's source code to start implementing new things.
Yeah.
Otherwise, you can unless you have had some serious experience, you cannot go from scratch.
Yeah. Yeah. Because one thing I remember with what you show me in .NET and C# is just stuff that you cannot do in even C++.
I mean, to do them, it's certainly, it raises the level of quant a lot.
Yeah.
You have to implement lots of new stuff. And, things that they can do on .NET, some things it took me almost like 3 months longer to do than in C++.
Right. Yeah, and that's the other the advantages of it with .NET. You can do your actual development a lot faster. So who's got other questions? I've got here the last question was asked at 7:32. And who's got questions? Oh, we got a question from Eric. Has your platform up to order management yet for basic order, market, and limit order? Yes, because interactive brokers, I use an actual library that can support pretty well any language, and because I'm using C#, it can support very quickly. They have a prototyping tool for any type of order you want, even a stop loss, and it's like a five lines of code, and you're good to go on the stop, trailing stop. I meant. So yeah, this library is really powerful. It's only $140, so it does a lot. But it's only good for interactive brokers. So it depends on your broker. Who's other got questions here? Because we've only been online for half an hour. Talking technology here. Come on, guys. We got 23 people online. Who wants to talk technology? We got another question from Joseph. Do you plan to use more sophisticated order types above and beyond limit and market, such as ISO sweep? From that library I mentioned, I've never seen an ISO sweep. The most complicated I've seen, as I said, is a trailing stop. And it's probably the most complicated I've seen yet. I think you're referring more to a strategy, no? Oh, okay, yeah, you're getting into, Joseph, you're mentioning here exclusive to NASDAQ customers. I think you're getting into some institutional stuff that the retail guy like me would not have access to. It's a different animal. We're piping it through.
Not all exchanges implement the same orders. Most executions are nothing more a combination of market or limit.
Right.
Down. I mean, shorting down to script level. So
Okay. So this is the combination of types of orders, right?
in reality, yes. So it's
Okay.
just some script logic.
Gotcha. Gotcha. I would always thought it was just a combination of different type of strategy. Who's got questions? I know Joseph's got a question, or Eric's got a burning question. We have some other people out there. Maybe we should go through them. Mention them out. Vince, Shalom, Ronald, Keith. We already heard from Nam, Kusha, Kuz, John, Clay. You guys got questions. We've got 2 Brians, 3 Brians here. Who else got questions? Man, I don't want to wrap it up early. Oh, see, you say that, you get questions now. Mike asks, is it possible to write algorithms that will follow traders' executed orders? I'm not sure what that means, Mike.
To copy a trading signal.
What do you think? Did you get? Can you read the questions coming in?
Me? No. But
Okay, let me repeat.
I think that he means that you're copying the trading signal pretty much.
Okay. And what's your interpretation of that?
I mean, I told you. I mean, pretty much this is what he's asking.
Okay.
He's asking if you can copy, if you can allow users to copy the trading signals.
Okay. And what's your answer?
I don't know. That's your system, and my system is
different. Does my system allow that? No, it wouldn't. In a nutshell. Pavel, do you have anything to demo us now live? Not tonight. No. I've got some YouTube videos on that already. If you want, email me. I can be reached at feedback@quantlabs.net. I don't know. I'll put that email in the chat box here. If you can see that. Just email me and I'll send out the links for the demos on YouTube. I'm not set up tonight to do any demos. I'll be doing that starting next week. Mike asks, traders equals the largest commodity traders. I guess so. Is that true? Commodity traders, the biggest traders out there? What do you think, Mr. Yeah, what do you think?
I don't know. I mean, I would guess from volume-wise, not necessarily.
I thought Forex was the biggest, no?
It has the biggest liquidity, the biggest trading volumes.
Yeah.
Not necessarily. Everyone claims different things. Doesn't mean a thing.
Yeah.
The question is, do you have a strategy that's scalable? Fine. Then just go where you can scale it. Otherwise, it makes no sense.
Joseph's asking me, how many hours per day during the past 3 years have you been learning and dedicating to this? This will give me an idea what to expect. For me, Joseph, I'm going to be honest, I spend probably 12 hours a day, maybe more. But you have to understand, even Mr. London Quant can attest to this, I spent a lot of time wasting a lot of things. So this system, yeah, you know that. Like, he's seen me pull my hair out after 6 weeks wasting time. But this
on software that you shouldn't even dealing with because you're stupid.
Yeah, that's right. I'm just a moron. I'm just a schmuck. That's why I keep saying I'm a schmuck. Yeah, but I've gone down many wrong paths, many bad rabbit holes. But this system that I've got will hopefully cut down a lot of that for people. Mike says, cool, thanks. Forex is the largest. To be expected, Joseph says, yeah, with a smiley. Yes, that's true. You know, I look at open source stuff. I mean, why don't you tell him what you told Mr. Leonard Quine about writing your own system and the advantages of it? I mean, I listened to you finally, and here I am. I've got a little basic system put together.
Well, look, as I said, unless you are a serious developer, you can open any open source code project, dig through it, take the right bits, and be able to not just hacking the code, but literally making the open source code yours. Then you're dealing with something that at one point will explode. Yeah. And that is the reality. So unless you're a serious developer, then fine. If not, it's just better to learn something through the whole procedure, and at least, you know, I mean, if something goes wrong, at least you know why it went wrong because you're the one that wrote it. Yeah. Otherwise, you know, it's dangerous stuff, especially when you play with real money. Yeah.
Yeah, I mean, I've
I
got,
mean, look, it's not a coincidence that every major fund hires developers, seriously good developers, to write their own stuff. Not just the strategy, but everything.
yeah, yeah, I mean, yeah, I can attest to that. When I try to reverse engineer some of the platforms, I just, it was faster for me to develop my own than trying to reverse engineer. I spent like a month trying to reverse engineer the thing. And again, it's one of those rabbit holes I just don't want to go down again. Is testing only done on paper or done with smaller accounts to ensure the system works? For me, I'm only right now paper trading. I haven't opened an account yet. But do you want to explain your history and what you did with your system?
Well, in our case, we build pretty much virtual exchange. That's quite different from most people.
Yeah.
So, I mean, in our case, we build a virtual exchange that can handle executions as we send them, and it will reply back with virtual executions and with full snippets and with price impact. So, what we see in reality is very close to the reality.
Yeah.
But it meant that we spend a serious amount of time like writing algorithms that simulate price impact and execution fields and quite a lot of stuff.
Yeah. Well, what about I mean, you spent about 30 days before you went live, though, right? On the LMAX exchange.
Yeah.
Yeah. Okay. Shalom's got a question. Do you ever have a losing day, and what was your max drawdown? Are you comfortable in talking about that, or no? I mean, you have bad days, though, right?
Who, me?
Yeah.
No.
No. Okay. It's a bulletproof system.
I thought that this was for you. No, I mean, I thought that he was addressing you with regard to the paper trading. In our case, it's different.
Yes.
First of all, I have been working with funds for some time now, through hedge funds, and just went independent. That's all.
Yeah. Okay.
So, I'm not the biggest brain, but at least I have some experience to know and to write some good strategies.
Right. Another question from Naeem. Naeem, I wish I could get that. What is a typical annualized volatility returns for a decent HFT system? I don't know. 20%. It's got to definitely be better than the S&P 500, obviously. 20%, 30%, just depends on the markets, no? What would you say?
You define high frequency.
Well, this is what I'm trying to, like, let's assume, I don't know, 100, 500 transactions per day.
That's not high frequency.
Oh, okay, 5,000?
I mean, for me, high frequency is market making. Anything else is slow.
Okay.
So I mean, people just speak about high frequency. They're not doing high frequency. They're in reality they are doing maybe some intraday or some medium frequency.
Well,
that's a big thing.
Well, let me ask you this: what would your target be if you got the S&P performing 15%? Like, what would your target be to beat it by 5%, 10%, 100%? Like,
in our case,
yeah,
100%.
So okay. Okay, I guess.
But also, when you compare, for example, the swap ratios between hedge funds and market makers, there's a huge difference because hedge funds will have a swap ratio of 3.5, even 4, and that will be exceptional. Where in the case with market makers, you'll see numbers like 30 and 40. So that's a big difference.
Okay.
But they are dealing with different frequencies, different holding periods, and different risk.
Right. Well, that's why I kind of wonder what is high frequency, and I always base it upon number of transactions per day. But again, I'm just a schmuck, right?
I guess also it has to do with how much you hold, for how long you hold your asset.
Yeah. Mike's got a question. Having heard about systems tonight, I want to be sure that I can develop my own system that will function in an HFT environment. Follow-up, so Brian, is the strategy more important than a solid algorithm? You can have multiple algorithms in a strategy, so probably answer it that way. In terms of HFT, if you're just starting out, I wouldn't even worry about HFT. It's just more of a buzzword, really. you want to, it depends on your capital as well. If you got like 5-10 grand, you're definitely not going to be high frequency. If you're dealing with millions of dollars in capital, that's a different story. Okay, so he's followed up based on what you guys have been talking about. Can a retail trading business me really? I think we're just waiting for a follow up here. I think what Mike's asking is, can a small guy turn into an HFT shop? Oh, here we go. No, I guess. What would you say?
Brian, I mean, you're retail. I'm not. Okay.
No, we're totally different levels, no doubt.
So,
no doubt.
But no, you don't have the resources, and look, maybe you have all the knowledge. Maybe you do have all the knowledge, and you're an amazing developer in quant. Good for you. But usually you will lack a number of hands. So unless you have a number of people helping you, you're working in a team, it's not enough for one person. It's impossible.
Yeah, unless you get super lucky and win lotteries or something. Lending quant in this.
You have higher chances to win the lottery than doing it that way around.
Or you can do the Bitcoin thing and do the mining. I don't know if you know anything about that. Anyways, lending quant in its experience can channel traders succeed? Do you know anybody who has successfully automated this type of strategy? And hourglass is a more developed term of a channel strategy.
He's referring, to my understanding, to technical indicator strategies, right? Because I cannot read the charts, so I cannot really.
Well,
is he referring to technical indicator strategies as saying channel strategies?
Right, but what's your view on technical analysis? I mean,
I don't deal with it. It does work. I think that I believe that it works. There's even a mathematical proof that it works.
I agree.
For anyone interested, there is this book which called I think Finance for Physicists or something like that, and they have there the mathematical proof of why it can work. But I don't know. I mean, that's not my field.
Yeah, you're going to have to probably email me the book. I'll get a lot of questions on that book reference. I'll put that on the meetup once we get it. Okay, Mike says that's right. I guess we're right. High frequency trading usually implies low latency, which means co-located servers. Yes, this is very true. But it's a very expensive operation. I mean, $5,000, $10,000 a month for hosting servers on an exchange.
Pretty good ones.
Yeah, and that's on a 5-year term.
And more.
Yeah. It's not a cheap game, that's for sure. Shalom asks, what is your weekly Sharpe ratio? What statistical techniques do you use to prevent regression overfitting? I'm not sure what you're comfortable with revealing there. It's 2 questions.
That's for me.
Yeah. What is your weekly Sharpe ratio? Which you don't have to answer that if you don't want.
Unfortunately, I cannot answer that. I can look. I think one thing that probably Brian has explained, I don't like to speak about some things. I don't really have any affiliation with Brian other than being friends. So this is why I'm doing, answer some things. But we are quite higher than most places you have ever heard of. Personally, for many reasons, we do not like to share these things.
And that's standard right across all equivalent of hedge fund and your type of operation. I keep saying, for me to be able to bring you into a public domain like this it's a rare event.
With regards to the other question, I do not deal with. I mean, first of all, that person referred to parameters in overfitting. Because, Brian, I cannot read the chat, so please tell me if you read something. That are you referring to doing optimization on the back testing?
Okay.
Yes?
Yeah.
That's what I mean, I'm not doing backtesting optimization though. I'm
Okay.
dealing directly with mathematical closed form equation models. So
yeah, you're a pure quant shop, right? Like a lot of your.
So we're not dealing. I mean, it's not that we have, let's say, one strategy and we're trying to let's say, brute force or use any other evolutionary technique to find what are the ideal parameters. I mean, that is stupid. That is stupid and dangerous. There
Yeah.
has been, I mean, the whole thing, there's one book on Pardo that released the whole thing on optimization and on backtesting or strategies, which it may work sometimes, but usually the strategies break. And there have been many prop shops, not just independent, but also from quite a big institution like Goldman Sachs that got fucked from doing this practice. So
Right.
in our case, we're not dealing with such techniques. We're dealing purely with closed form equations. Some of them, like, you know, we are generating from Bayesian analysis, Bayesian decision trees. Some other of them is through some evolutionary programming, and that's all.
Yeah.
So we don't really deal with the problem of overfitting.
Okay. Now there's a question about grid systems and any grid. You're not doing any grid systems at all, right?
In my case.
Yeah.
For what? For supercomputing or?
Well, he's asking grid systems, no indicators. That's what I guess Ronald's asking.
Grid systems. I haven't heard this terminology. Grid systems.
Yeah.
Indicators. I mean, if it's possible to give some further explanation, just to understand what he means.
Okay. Mike's got another question. So how much money does one trading with backup developers programming helping need to really take part in HFT to see profitability? Again, that's another open-ended question. I'd say it just depends on your strategy and your performance. To do HFT, I would imagine you got to be at least, I've heard $2 million, $5 million starting capital. I'm going to assume to do pure HFT, you got to be pretty big. 6, 7 digits for sure.
You have to be 6 digits. You have to be 7 digits. Right.
Yeah. A little retail guy can't do.
To be comfortable for the first months.
Yeah. Yeah, and consistently profitable too.
And these guys, are they referring to market making HFT with regards to collocation or just intraday? There's a huge difference.
This is, to be fair, I think I'm in the same boat. Like when you hear the word HFT, you think it's just a type of trading, but it's just there's so many steps involved to get to that level to be called HFT. You can't just like open up the doors and have $1 million and just say you're an HFT shop. There's so many steps involved. Next question. If the researcher tries a large enough number of strategy configurations, a backtest can always be fit to any desired performance for a fixed sample length. Does that make sense to you?
Well, it depends how you do your backtest.
Yeah.
So, for example, do you include in your backtest fake executions with slippers? Do you include a price impact or a market impact? Do you include other penalty factors? So after you include all these things, do you still make money?
Yeah.
So again, I mean, the more you penalize yourself through your backtesting, at least the more sure you are, or at least, you know, not sure, at least you increase the chances that you may have some more stable strategies. But usually they say that if the strategy doesn't work from day one, forget it.
Yeah.
And I do believe in this rule. If it doesn't work from day one, just forget it. There's no reason.
Right. Well, because go ahead.
No, please.
Okay. Ronald's got a question about how many people would be required to form a team. I would say it can be as low as one person. Just depends on how many hours a week you want to work and the extent you're willing to work. And I've had operations have as many 20 people that went nowhere. It just depends upon your progress and your set of goals. There's
one interesting thing. What unique features each one will bring to the table.
Okay.
Because if you have 4 people who all know to do pretty much the same thing, and no one has experienced, let's say, in some specific things of trading or backtesting, and I mean solid experience, then it's not going to be a good team.
Yeah. Yeah, I agree.
I mean, will you have a person that has ever written before from scratch execution algorithms, or will you have four people all willing to do the back testing? Because this team will end up fighting.
And then you need a specialist that can write a fix engine. Then you need somebody to do.
Or at least be able to utilize some of the ones that are out there and in a nice way. So which again it means have you ever dealt with it before with fixed protocols? Because if you haven't, then good luck to you. It can be quite complicated sometimes, and very few people will sit down and help you.
Yeah. Well, there's just, again, so many steps involved to accomplish this. It's a lot of work. And as you said, have to have the right experienced people to get it done. Shalom followed up with Monte Carlo question mark. What do you think of Monte Carlo, I guess, is a good way of asking that.
One thing with regards to why with the Monte Carlo is a nice, it's a technique, in a way to do a simulation, but what exactly about Monte Carlo?
Right. Ronald was making a comment about there was a huge gap between responses, so there was no continuity. Mike's thanking me. Brian's thanking me. Thanks. Question again from Ronald. I guess this is a repeat of a question. Is the system stable or does it break? If it does, is it during high traffic peak times?
Is he referring to my system?
Yeah, just your experience. Is it stable? Is it?
In our case, we don't have any issues. That is not an advertisement because I'm not selling anything and I'm not planning to ever. It's a fact. It doesn't break.
Yeah.
But also we did spend purely 1.5 years developing it from scratch.
Yeah. He's followed up with a question about even on the institutional side. So it's the same answer, right?
I mean, I am working on the institutional side and I don't have any problems. I'm not working on the retail side whatsoever.
Yeah. Okay, Ronald said okay. Anybody else got any questions? It's coming up to 8 o'clock. Anybody? We're up to 19 people. I guess we've lost a few people along the way. Who's got questions? That's what we're here for. Anybody? Got two questions. How do you predict your future P&L from Shalom? Is that possible?
More or less.
Okay.
You can make some rough estimations. Look, in the same way that you have value at risk, right? You can also have something equivalent, if you can ever call it, as value at profit. So value at risk will be pretty much, taking out the 95 percentile of your losses and do the same thing for the wins and see what's the potential for each day, and then just try to do some Bayesian analysis and inference for the future.
Yeah.
But I think the easiest way to do it is just do some serious backtesting on tip data for, let's say, 1 year worth of data.
Yeah.
And just break down your analytics per hour, per day, per week, and see pretty much where are the problems, and just check how much is your live drawdown, your daily drawdown, your weekly drawdown, and interpolate pretty much what is the worst case scenario, what's the best case scenario.
Right. But the VAR is a good answer, man. Really good one.
I think you can have the VAR, you can have the VAP. I mean, everyone puts certain huge importance on the value at risk, and it makes sense. But at the same time, you can also see the reverse. You can also see how much your value at profit.
Yeah. We got a bunch of questions that came in. One from Eric. Can you elaborate a bit more on how brokers can trade against you? From my understanding, they just put extra trades in there to go against you.
They have to hedge. They have exposed. If suddenly everyone goes and goes short something, they have to hedge their positions so that they will be flat with regards to their risk. So obviously they are going to, place a considerable amount of orders on the opposite side.
Yeah.
They always have to hedge themselves.
But
The
what you do,
question is, are they hedging with the same instrument, or are they hedging with a different product?
well,
There are brokers which are dodgy, and they will hedge with the same instrument. So that is bad. If they hedge with a different product, it's slightly more decent. So depends.
but would you say though that they're going to hedge against in a predatory way?
Well, every broker, in my opinion, wants you to lose. Every broker wants to take over your margin account. Come on, they want to make money.
Yeah. Yeah. Question from Ronald. Was a London quant on the C64 scene? Commodore 64, I assume? I was on the VIC-20.
No, I was on the Amiga scene.
Ah, Amiga. Yeah. Yeah. That's post C64, I guess. Any tips?
But you're older. You know.
VIC-20, yeah. Was right behind the PET. I also must add that Commodore was a Canadian company too, so that's our contribution to the computer industry.
See, not again. I heard the whole thing.
Okay. Fancy schmancy. Any tips on where to get download MATLAB for a discounted cost? Is 2013B the way to go? From Joseph. Yes. I put up 2 videos on it, and unfortunately, unless you're spending tens of millions of dollars, you might get a 5% discount for MATLAB. There's no discounts. There is...
Well, that's a fucking M word again.
Oh, I know. He doesn't want to hear it. I'll mute. Sorry. Ronald said, being an assembler program and sounding Dutch, there's no continuity. You have to repeat your question, Ronald. I can't quite... Shalom asks, how do you deal with fat tails? Do you deal with fat tails?
Well, you just don't, use your typical distribution models, just go for some extreme value models. So Gamble, Fraser distributions, type 1, type 2, Bayesian distributions. So anything that is not normal.
Right.
And the first thing you can do, take your data, do your analytics, see if it is a normal distribution. If it is not, then try to fit it with a different model.
Yeah. Mike's got a funny question. It sounds scary with all the cache testing, back testing, algo, writing, etc. that is needed up front. So if we take the time to develop our own software and able to run servers on the market, we'll have a chance to compete and make a profit. Really, is it worth it to try and trade as a retail investor? Well, look at Goldman Sachs a few years ago. They used to have $150 million days. So that's why I keep saying you got to be driven to make it worthwhile. There's no quick and easy way about it. You have to be pretty devoted and committed to it to really see the potential of it. What do you say?
I say it from a different point of view. Just see how many hedge funds open every year and how many close every year.
Yeah.
You'll be astounded by the numbers.
Yeah. Ronald made a comment.
Chances, even for a serious company that when it starts to make money, are not that high.
Yeah. Got a comment about L'Amiga. Okay. Real HFT seems to be high for the high rollers. What time frames do you see the faster than ordinary retail trading?
Depends your strategy. I'm not a market maker and I don't like market making whatsoever. So I'm not HFT.
Right.
I am much more down the intraday trading.
Yeah.
But anything between few seconds to few hours.
Yeah.
So it depends. Depends the strategy, depends the symbol, depends many things.
You're going to like this next question. Mike thinks you're called Pavel. We just call him the London Quant. Pavel's another person on this call. But here's his question. You ready? Hope you're sitting down.
Yeah.
Is MATLAB not the only tool? And why don't you like MATLAB?
Because from my experience with some things that I've seen in MATLAB, some of the models, in my opinion, at least from the maths point of view, weren't implemented correctly. So I have experience of people having to rewrite whole toolboxes of MATLAB because they're slightly wrong.
Yeah.
So
there you go.
And I don't like anything that is pretty much, close code.
Yeah.
I love GSL. GSL, the GNU Scientific Library, is very well written.
Yeah.
And I can always go there and see how they have done something. So I can study the code. I can improve the code. I have taken functions of GSL, convert them to parallel, extremely easy.
Yeah.
So I think that, first of all, I know what I'm putting into the system. That's one thing. And at the same time, I don't know, I think that I'm educating myself slightly more.
I agree with that wholeheartedly. There's a comment about MATLAB being $99. Yep, we know that. Here's a question you might like as well from Clay. I don't promote, I use Art, but you can get free versions of 2013A MATLAB or earlier off of our friend, the torrent place. Better not mention it, but we'll leave it at that. Brian says, also Octave is very compatible and free. Right, but you don't get all the other fancy schmancy stuff that I talked about earlier about the code generation and stuff. For the guys asking about where to get MATLAB, yes, I'm not here to promote that. What is Mr. Quant's opinion on trending and non-trending market and strategy development? Not sure. That's from Eric. Does that make sense to you?
Yeah, then just use Markov suites. You can use Markov suites with Zinus to define the trending. Pretty much to switch your strategy from trending to not trending.
Right.
That's one way. The other way is to use wavelet decomposition. So there are some ways to see exactly what's happening in the signal.
Okay.
No, I would say the first thing, just go Markov because it's easier.
Right. Okay. Question on, okay, Ronald asked about the chat window, works through there, some delay it seems. Okay, I guess a comment. Question from Clay. For London Quant, recall Quant recommended a self-organized map neural networks previously in an earlier session. I think it's from last week. My previous question is, what area has he found SOMs to be useful? E.g. in equity, tick data, equity returns.
First trading, anything above minute bar. 5 minute bars, 15 minute bars.
Okay. What about the asset type? He's asking about that on futures forex. Equity.
It doesn't matter the asset type. You don't care for that stuff. You care for if there is some sort of integration. That's the only thing.
Okay.
And you use it as an alternative to the typical integration techniques.
Okay. And then he followed up with, I haven't found NNs, neural networks, to be useful, and I'm curious to know what area neural networks might be useful. What's your take on it?
They are useful. They are useful. They're very, very useful. Nowadays, many econometric books will include neural networks somewhere inside. There's one problem. You need to deal with a huge amount of data, and the amount of knowledge that you have to know with regards to neural networks is not a simple matter, because you have to pre-process your data in a very elegant way. You have to post-process them in a very elegant way. It is not an easy job, and at the same time, when you're dealing with huge amounts of data, the only feature that you can get the neural network to converge to something decent is only by incorporating some GPU techniques for parallelization. Other GPU techniques for parallelization, or OpenMP through GPU, or OpenMP through ZMFI, or something like that. But you're sitting for some serious amount of time waiting for that thing to finish running.
Yeah.
Before being able to use it. Now, obviously, you can say that you can go and use some sort of adaptive neural networks like recurrent, but they tend sometimes to break. because they haven't been shown all the cases. I mean, so it can be quite complicated matter. But they work. It's just that it's a mastery. You either get it, or you don't. So I mean, even for me, it has been so difficult many times.
Yeah. Because we had a presentation on that about 2 years ago, and they found that support vector machines only provided something like a 50% ratio of any kind of profit opportunity or return. It's no different than casinos, I guess. Another question from Ronald. In his experience, can channel traders succeed? Anyone who has successfully automated this type of strategy, which is a grid system in simple terms. However, the hourglass is where it compresses the execution price. It uses no indicators, just price action. Have you heard anything about that at all, or know any knowledge?
Look, as I said, I haven't dealt with any form of technical trading. The only thing that slightly reminds me of an hourglass, how it looks like, is when the standard deviations, the upper one and lower one, compress. But
right.
Even then, you don't know what is going to happen, because at that point, usually it means that there is no decision with regards to the price movement.
Okay.
So I don't know. I would say seriously, I've never dealt with technical indicators. It's not my field.
Yeah,
You're a bit more qualified than me.
Yeah. I've never done it. Going back to neural networks, I've researched. I had somebody approach me about grid systems, and from when I went on to, I'm going to assume for Forex, there's a lot of comments made that they don't really work that well. And I just kind of abandoned it. And same with the neural nets as well. Because, as you said, I mean, everything's based upon math, and math is proven that works, right?
It's not true when it's a good assumption that it works, but at least you try to eliminate most negative outcomes, and yet you cross your fingers at the end of the day.
Yeah. Clay was asking about those minute bars. You mentioned anything over 1 minute bars, right? That's regarding the neural nets.
Pretty much, yeah.
Okay.
The main reason is that just to get a much smoother pattern of data, because otherwise on the big data, first of all, it will be too much for someone to try even to train in your network with big data.
Yeah.
I mean, people have issues with training normal linear regressions with big data. Even worse, your network is nothing more than thousands of linear regressions.
Right.
So, I don't know. With neural networks is, generally, most people will see that most publications deal with, first of all, end-of-day data. There are very few publications that deal with intraday data on minute bars.
Yeah.
So I think you understand how much is the research, in that field.
Yeah.
And I'm sorry. I mean, for the ones that have access to research journals, you will easily see that, many people will say, yes, we will do the backtesting and it will work, and here are the results, but they mean exactly, because most of these things don't take into account stop losses, drawdowns, or anything. They just see entry exit point.
Yeah.
But they do not take into account what can happen within a day. So, which is quite a bad assumption.
Right. And there was a comment about, Brian said that neural networks is good for classifiers, data mining, and looking for patterns.
There are many things that you can use instead of neural networks for patterns.
Yeah.
Many things.
Yeah, I agree. I won't say, but we all have our different theories. I personally like SVM. That's what Brian says. Ronald asked, how does LMAX differ from an ECN, or are they essentially the same technologies? I can say that.
Pretty much they are the same thing.
Yeah. Okay. But like I said, I like them because they're market neutral.
Yeah. They're in my opinion, they are doing a very good job.
Yeah. Pavel's asking, what trading idea, model, market inefficiency lies behind your trading strategy you are planning to implement? Which instruments are you intending to trade with? I'm doing Forex, like I said, futures. What trading ideas? I'm looking at a variety. I'll be posting those as I go in the next couple of months. But we're starting right now with statistical arbitrage and some other classic methodologies. Do you have any comment on the type of strategies you're doing, or not really, Mr. Leonard Quant?
Not really.
Okay, I
mean, pretty much most type of our strategies are momentum strategies. That's one thing. But we're dealing with our data in a CP manner, so we're not really saying what most people will deal with mini bars.
Right.
Mini bars is a very bad assumption, because someone goes and says that my bar is between 12 and 12:01 and 12:01 and 12:02. Time is not cut down in this way. So I'm dealing purely with big data at all times, no matter for how long I would keep the asset.
Right. Pavel's followed up with, I got a question from Clay about in regards to feature engineering for neural networks. We pretty well talked that quite sufficiently, I think. Pavel's asked about, in your opinion, is arbitrage still profitable? Do you see shorting equities promising? Do you trade options, and do you buy gold? I guess I can handle that. That's easy enough. Like I said, we're going to try arbitrage. I got a guy looking into that right now. So there's obviously some potential. I mean, from a beginner's level, that is. Shorting equities. I don't know. I mean, from what I've seen, I don't know if you know Tim Sykes. He likes to short microcap stocks or equities when they're about to go down, and he shorts that. Do I trade options? I'm looking into it, but I don't know. It could be kind of too slow moving. And do I buy gold? If I did, that would be only if I saw the markets were going haywire. Do you have any comments on any of that stuff, or no, not really?
What you guys what?
Why don't you just say statistical arbitrage? You see any potential with that?
You mean pairs trading?
The equivalent, yeah.
I'm not the biggest fan of purely because in momentum strategies you can get bigger profits, statistically speaking.
Okay.
That's the main reason. And I don't know. I mean, I have trouble enough following very few instruments now to follow like how many hundreds and thousands of pairs. No, that's not my interest whatsoever.
Mm-hmm.
Also, there's a thing that certainly there's a solid theory in statistical arbitrage in pairs trading, through integration. But in my opinion, integration is is based on many assumptions.
Yeah.
And I don't like assumptions.
Yeah.
I mean, most mathematical models have enough assumptions already. Pairs trading takes to a different level.
Yeah.
And it's no wonder that many people say, "Oh, well, but everything said, my model that these two assets were integrated. Why they don't trade well?" Well, shit, because many of these things is still an assumption.
Yeah. Yo, man, it's stuff like that I'd never think about when it comes to that. Like I said,
I think with regards to the one person that asked before, with regards to the self-organized maps, the reason that I said they're good for integration is because yes, you'll have the metrics that you get from all the assets versus all the assets to see which ones are integrated. But on top of that, you can put a self-organized counter map to see the same thing from a different model. You can do the same thing, maybe through correlation. So my easiest approach would be just to superimpose them and see why is the shortness similar. At least to take out the ones that they don't really have a strong connection as pairs.
Right.
But usually also the problem is that in integration, unless you take some quite long positions, and I mean holding days, by the time that you would enter into the trade, at least in the intraday fashion, you have already lost quite a big potential of profit. So, in my opinion, and from what I know for some people that have done successful integrated strategies, is not as simple as to see if they are integrated and go along the one or the other and vice versa when you close it. But it has the strategies that I have seen in my life so far, they're considerably more complicated than that.
Right.
Because besides seeing the two, if they are integrated or if they they cross the threshold to put the trade, you also have to observe each one individually at the same time. So it becomes a quite complicated business.
Right.
Most people that I know that they are doing integration strategies, they're not really that successful or have that big profits.
Would you say a few years ago it was good, but right now it's not because Euro's the classic? Well, the markets are more efficient now, so there's not a lot of opportunity in pairs trading.
I don't think that it's a matter of opportunity. It's a matter if you're good at it or not.
Oh, I see. Okay. Pavel's got a question. He's got a bunch of questions in one. How did you backtest the strategy you're trading at the moment? I'm going to have a whole demo on that in the next few weeks for my members. I'll be using a third-party software that can download the CSV, and then I test it all within MATLAB. What are the three main criteria to throw away implementation or launch your strategy on a demo mode? Simple. What would you use as benchmarks to see if a trading strategy is going to fail or not? What are your top three signs of failure?
How fast it breaks even.
Okay.
And for me, I care what is the profitability. I won't have as high profitability as possible, as many high win to loss ratio. That's all I care.
Is there any mathematical indicators you're looking for? Skewness?
Well, obviously you want a positively skewed returns, but
Yep.
but you would see this thing through profitability. If you have high profitability, you have a positively skewed returns.
Okay.
So actually, slightly mistake. If you have both high win to loss ratio and high profitability, you will have guaranteed a very positive skewed profile of your trading report. So
Okay.
I just want to have as many little trades as possible. That's one thing.
Okay.
And with as few losses as possible. That's one thing also.
Yeah.
And if there's no reason to trade, don't trade. It's better not to trade than to overtrade.
Yeah.
I prefer to stay out of the market for one day if I don't think that the conditions are right than to try to put one or two trades and lose money.
Well, I think he's asking if before you go into a live trading environment. I mean,
before you go into but again, if you do the backtest with our system, if you do the backtesting, we will get almost as. First of all, just to make one thing clear, our system, the way that it behaves exactly the same way live and offline. So even the strategy, you don't need to modify it whatsoever between live and virtual environment or backtesting environment. So when we generate trades report, it will be exactly in the same manner that we'll generate a trades report for live environment.
Yeah.
So exactly, we will see inside the same thing. I think the only difference in comparison to the paper trading or the live environment of the backtesting, we penalize the strategies for even more points.
right. What about forward testing?
Well, sorry, excuse me?
Forward testing? Do you believe in that at all?
Yes, but every backtesting system, in a sense, is a forward testing as far as you haven't optimized the strategy.
Right.
So if you have optimized the strategy for some parameters, and then let's say, you have data between January 2013 and now, and let's say you train your strategy between January and June, and then you try to do a forward backtesting from June until now, excuse me, then it's okay. But with our strategies, there is no optimization parameter, so in reality, the whole thing is always forward backtesting.
Okay. There's still a bunch of questions here. How long you let the trading strategy trade on demo before you deploy it to live, or where you start deploying live money to it? That's pretty. There's really no definitive date, is there?
Depends on the product.
Right.
Is it a very liquid product with high volatility? You don't need to spend too much time.
Yeah.
Is it a product that has variable days of volatility, like sometimes with equities? Then the longer the better.
Right. Did you change any parameters during the demo trading period, and if so, why?
No, none whatsoever. The strategy as it is on the backtesting, without any change even on the code, to be able to go live, the same thing, go live.
Okay.
No change whatsoever.
Okay.
Also, the last thing that you want code-wise is to have one script, which is the strategy in the backtesting, and one script, which is the strategy for the paper trading of the live. That's unreliable. You have high chances that you will implement something on the backtesting that you forget to implement on the live.
Right.
The same file has to be the one for both case scenarios. Now, how you do it is down to how you devise your execution environment and all the rest. But you have to deal with some very good system engineering there, so that everything will remain the same. Just only change your plugins or your feeds.
Right.
That's all.
Okay. Now, Ronald's asked, for an independent punter, MATLAB is an expensive option. Is Rapid Eye still an option despite its limitations you expressed last seminar? I don't think there's any change of opinion there, right?
I don't use it. And look, I come from a background that for some quite long period of time I was implementing models in C and assembly. So if I'll see something that I like, I will just sit down and write the code.
Yeah.
I know quite well that it has some issues with regards to the speed. Also, I want to be able to pass a file of, I don't know, like 10 gigabytes and process it without any issues.
Yeah.
I know, for example, that Eureka Newtonian has issues with big data, no matter what they claim.
Yeah.
So,
this is from Eric. The grid system is assuming the market is random like a casino. Mr. Lenquant, what would you say about the randomness in a market? I think that's pretty self-evident.
It is random.
Yeah, we
the
know.
best thing you can do is always assume it's random.
Yeah. Yeah, we know that, yeah. How much capital do you need to trade with from Shalom? Or I think he's referring to you. It's one of those questions you probably don't want to answer, but I'll say this: you got to have quite a large set. Like you mentioned, 6 or 7 digits, right?
For what? For
starting capital. Starting capital.
Well, again, for high frequency or for what?
No, just generally, just you. Like we've already mentioned that it's 6, 7 digits, huh?
For our side, it's 7 digits.
Okay. London Quant, does he know of any broker where you can execute more than 350 trades per day through a retail broker using 7 cents for a mini lot, 1 cent?
I'm sorry. I don't deal. I've never dealt with retail brokers in my life.
Yeah. Yeah. The only one I would recommend at that level is interactive brokers, just for the API. You have to be careful on your broker. From Pavel again, am I right that in order to test an option strategy, you are considering 20 strikes? Which platform would you recommend to analyze 20? Oh, analyze 20 depths of market for 20 strikes in real time. I mean, I mean,
Excuse me, can you?
this is a question for Pavel. Am I right? In order to test an option strategy, you are considering 20 strikes. Okay. Which platform would you recommend to analyze 20 depths of market for 20 strikes in real time?
I don't deal with derivatives. I've dealt with them for a few years in my life, and I don't want to deal with them again. So, again, not the right person.
Yeah. For me, I think for that, you're looking at institutional type of platforms. They're very expensive, and even if depends on your.
But even with back testing, you can always fake the execution and penalize yourself.
Yeah.
So there's not an issue. There are tons of research papers on what kind of different algorithms you can write for fake executions, and add to your execution results, to your execution fields, like different fat tails. There's not an issue whatsoever. So you want to really stress test your strategy.
Well, he's referring to level, like 20 levels.
Yeah, but it doesn't matter the levels. You can put unlimited levels on a fake execution. You can penalize yourself like to the point of infinity.
Yeah. Yeah.
And again, sometimes, as they say, if you don't have to access the data, just penalize your backtesting. Whatever trade you do, deduct how many points.
Yeah. I mean
deduct points from asleep. That's deduct points as price impact. Deduct points from the bid-ask spread. Deduct points from low volatility or whatever. You can always do this kind of things.
Yeah.
You don't need to have necessarily all the data. You just have to be slightly more clever.
There you go. Have you ever done any webinars on Python? Python's not my primary language. That's from Eric. We've talked about it with Iron Python. I did a demo on one of my YouTube videos. Honestly, with .NET, it works great. It's a lot better than trying to connect it with R, but then you're going to have compatibility Python versus Iron Python. So you got to keep those sort of things in mind.
Well, I think this is a fine language.
Yeah, it's getting out there. I'm getting more and more job requirements with Python, so it's getting out there. Rare thing. Any other questions? I think we're all caught up. It's 8:30, hour and a half, which is quite good. Anybody got any questions? We can always wrap it up if you want. We'll probably get a whole stream of questions. Anybody? Anything you want to say, Mr. Lemon Quant, about running your own platform versus like retail platforms or any open source type of platforms? We covered it pretty well.
Well, look, for the, unfortunately, there's this very arrogant mentality in the whole area of finance that if you're not inside, forget it. Now, certainly, if you are not inside and you don't have a PhD, your chances that you will go for a research position are nothing. But this doesn't mean that people should be preaching that you cannot start something yourself, and I think that's wrong. So there's plenty of open source code out there for people that want to sit down and read. Unfortunately, you will end up a serious amount of time, first of all, trying to educate yourself, and usually trying also to improve your coding skills. And even if you do all these things, the last thing will be, when it comes down to the strategy, what are you going to do? Because then I believe, that especially when you're dealing with quite substantial trading amounts, nothing that comes down to the retail side, you have to be more clever. You have to be more clever because you have to allocate considerably bigger amounts of cash. Yeah. So then it comes down to what models are you going to use. So then, of course, the question is, do you come from a math background? Do you still remember your maths, and can you still read any recent journal and be able to read the model and implement it?
Yeah.
And unfortunately, even people in the field right now, they cannot really do it that easily. So I think sometimes that, certainly finance has a very bad name, and in my opinion, deserves it because of many people that have done wrong. But sometimes you see this meritocracy, not because people want to be like that, but because unfortunately the level of the difficulty is quite high if you want to survive.
Yeah.
I think that with the small amounts of capital, there are there are many successful strategies which are actually extremely simple and they do work. Um, the question is what you want to do. Do you want to have this thing as your main job, or do you want just to have something that will assist your pension fund?
Well, I from what I've seen, everyone here is probably some may want to get into, I don't know, trading for a firm, a bank, or whatever. But there's going to be a bulk of them that are wanting to do this on their own or have a team to develop their own system. But as we all know, there's a lot of work involved.
It's always be careful.
Yeah.
Unfortunately, there are many people that they claim to know stuff and they don't.
Yeah.
And if someone is putting money, you have to be very careful because you're dealing with live cash. Now, for people that come from some sort of engineering, math, or physics background, or some high level of computer science, and have a PhD, and they want to work in the area of finance. Unfortunately, in the last 2 years, there were quite a lot of people that got fired, both from banks and even from hedge funds, or even from proprietary funds. So, unfortunately, the level right now of competition is quite ridiculous because if you don't come from finance and you don't have, let's say, any postdoc experience and years of experience, there will always be someone that has worked on the field, knows probably more than you, is not necessarily more clever than you, but will have higher chances to get a job.
Yeah.
And I know that it is unfair sometimes because there are many clever people out there that they don't necessarily come from finance and they do some amazing programs and research. But unfortunately, the field in many ways is quite stupid and they don't always get recognized.
Yeah, totally. I've been doing it for a couple of years now, but I mean, I wouldn't be doing it if there was no potential. But what I'm trying to bring here is just a platform for people to learn on their own and expedite the learning. So you don't go through what I went through for. Well, you remember I was working on one thing. I was like 6 weeks of wasting time on it. You remember that? I was on the SQL Server stuff.
Yeah, still started swearing you. I do remember.
Oh, I remember that well. I mean, I've looked at platforms for a year here and there and just come back to looking at wanting to develop your own platform. It's all about control and having 100% of your own source code. That's pretty well how you approach it, right?
I think, look, with our stuff, there is almost no third-party plugin.
Yeah.
And we are going to keep it in this way because if there is something wrong with the system, we can always go back and fix it because we will know where the mistake happened.
Yeah.
The last thing that you want is to develop something that runs beautifully, but then suddenly you depend on some third-party plugin.
Yeah.
For some unknown reason, it crosses or it doesn't work as well, and then you have to deal with requests of support and all the rest of the crap.
Yeah, yeah.
And it's fine if you don't have a job and you just want to do it for your free time, then go for it. But otherwise, if you're trading and you want to have your system back up and running as soon as possible without any issues, it's not viable.
Yeah, yeah. I know Halvor just joined us from Oslo, Norway. Yeah, this is being recorded. It's going to get posted on YouTube, my YouTube channel. So Mike dropped a doom and gloom kind of comment, I guess. So without math or someone in our team that does not have a high understanding of math, we will not succeed. Is that correct?
No, I'm not saying this thing. I'm not saying this thing. I'm saying this thing in the case that you want to, look, in the case that you want to get hired by a fund, I know people with PhDs, and instead of working properly in research, they're just doing some quant development. So I'm not saying, that you need to be the math brain. You just need to research a lot. That's one thing.
Yeah, and that's go ahead.
Fortunately, even to get to the point of testing your models, but in an advanced manner, not just less. I mean, look, there are many programs like whatever. Let's call the one of the let's call the C Trader, for example, or the multi-charts. They offer some sort of backtesting, but let's be honest, the backtesting that you offer is for the garbage.
Yeah.
No serious person will see this backtesting. They will say, yes, it works fine. And then people sometimes wonder why their backtesting works perfectly, and suddenly they put it live and it fails in the first 5 minutes. So, and again, we have to be very specific. If we're dealing with purely algorithmic execution, meaning that you put down your little trading system and you don't touch it and you let it trade, especially for the live environment, the amount of testing, unit testing, and test runs that you have to write to guarantee that everything will work smoothly is insane.
Yeah.
You're speaking about a few months just unit testing.
Yeah. I mean, as you said also about if you keep it simple, I know Ernie Chan, he does well because he keeps all his strategies really simple. There's nothing complicated about it. So if you want to complicate your math and algorithms, yeah, go for it. But then you're bringing a higher chance of failure.
I'm not saying that the chances of failure are high, because there are many funds that they perform amazingly well, and they are partitioned only by PhD people. But this doesn't mean that you have all the other traders who are doing equally as well, and they barely know how to add one and one together.
Yeah.
But these people usually have an enormous amount of experience.
Yeah. Yeah, I think being self-taught, it takes a while, but the rewards at the end of it are quite staggering, I think, like in a good sense. It's just, I keep saying, it's all about your drive and how much you want to learn and so forth. I'm getting a few people dropping off, so if anybody's got any other questions before we end it, I think it's almost it's 8:45 here in New York time. So we've almost been spending almost 2 hours on it. If anyone's got any other further questions at all, or otherwise we can just wrap it up right now. You got anything else you want to add, Mr. Quant?
No.
I think you've added quite a bit. I appreciate you coming out tonight. We got Naeem asked, is it possible to chat sometime on Skype this week? Yeah, for sure. If you guys want, I can give you my, actually I gave you my email. I'll put it out again. It's feedback@quantlabs.net. So just reach out to me there. Ronald asks, what % do you strive for in your algos, e.g., or example, 55% success? Do you put a target on your returns at all?
Look, with regards to returns, we are much higher than most places. You just don't advertise it because we're not a hedge fund.
No, he just wants to know, but do you put a specific target on each return? He's not asking.
We have a target, yeah, we have a target.
Okay.
We have a target, yeah. We are. If you need to be returning an X amount of money a day.
Okay.
Guaranteed. If the strategy doesn't return this amount of money a day, even though it can be a good strategy, it's out of the window.
Yeah. Anybody else got any questions? Everyone's saying thanks. Thanks for coming on out. If everyone's dropping off. If not, we can wrap it up. Oh, yeah, everyone's saying thanks. Thanks for coming on out then. So we'll wrap it up in one. Well, thanks a lot for coming out, Mr. Quant. You've been, once again, a valuable asset to this conversation here.
You're welcome, dude.
Yeah, we appreciate it. Yeah, I'm getting a lot of thanks from everybody. Great webinar. So some people are really appreciating it, as usual. Without him, I don't think it would be 75% as good. He just brings a lot. Amazing value added between the two of you guys. Well, thanks a lot, Joseph. Again, thanks for coming.
Just remind Brian he owes me some beers.
Say that again?
Just remind Brian like he owes me some beers.
Yeah, the bill's collecting, ain't it?
I think that with any line of code that I give you, yeah, it goes up.
Yeah. Well, we'll be able to get a copy of the slides. Yeah, they're already posted, Mike, online. Just email me at feedback@quantlabs.net. I'll get you those slides. They're already out there. If you got any questions, just reach me again at feedback@quantlabs.net. Okay, and then we can go from there. I guess we'll wrap it up. And I'll see you on the other side, Mr. Quanti.
Cool, dude. See you in a while.
He's up at what's the time right now? 3 o'clock? No, 2 o'clock, right? Come on.
Fucking almost 1 o'clock right now.
There you go. He's that committed. All right, thanks a lot.
Actually, I've been coding all this time, so yeah.
Long hours, man. Bless you guys. Jesus loves you both. Same here. 5 a.m. here. We have a lot of people committed to this webinar. Like I said, if you guys want me to do it for you guys out in Asia or Europe, I can do it at 7 a.m. Not a problem. Just let me know. I just want to make sure we get enough people. Would it be easier for you at 7 a.m. or is that really pushing it? Because you like to be on the door, right?
What, 7 a.m. in the morning?
It'd be 7. Oh, it'd be 11 o'clock. It'd be trading hours for you, wouldn't it?
I'm not gonna, I mean, anything after 5 o'clock and from 5 a.m. kind of do it.
Yeah. Okay. Well, we'll figure it out. But thanks a lot, guys. We'll wrap it up. It was an awesome one. Really good. But again, thanks a lot for coming on out. Thanks a lot, Mr. Quant.
Good night, guys.
And we'll see you soon in a new webinar. Have a good night.
Bye-bye, man.
Take it easy.